Hi everyone, welcome to another podcast of CA at 7 at 7 podcast. This is episode 5. I am here, Ishwar. I'm a qualified chartered accountant with 5 years experience. And in today's episode, we are going to talk about 7 different topics consist of economy, direct tax, indirect tax, various financial reforms, and concepts of accounting, GST, and also we talk about CFMS PD account of various state governments in this episode. Coming to the first topic at 7 at 7 is exit by Bansal, who is the founder of Flipkart, who invested $100 million in Bhavish Agarwal's Ola in 2019. And I think Bansal is in talks to sell $100 million investment in Ola at a premium. Coming to cost of acquisition, he bought around $100 million stock from Walla in 2019 for a valuation around $3 billion. And coming to the sale price, the news is that is going to exit at $4 billion, around 33.33% gain, which he invested in 2019 at $3 billion in Vola, and now is going to exit at $4 billion. So I think roughly it's around 33% gain it's fetching. So that's how the talk. The news of the deal is that Bansal is in talks to sell his $100 million investment in Vola in 2019. And coming to the this exits and plan for this fund inflow is that when he made an $100 million investment in Vola, he has how he got the funds, right? So in 2018, where he exited from Flipkart by selling his stake, 5% stake to Walmart. He had made a $1 billion entire stake from sale proceeds, where the news is that that time he had made a lot of investments in the startup economy, and one of the investment is that Bhavish Agrawal's Ola's, it's a ride hailing platform app, where we can listen every day is that Ola, where we can book autos, cabs, and it's very famous in entire ride hailing platforms in various cities in India. And why he has this take coming to the exit by Bansal is that where we are also seeing that Bhavisi also floated a new entity, NBFC entity, is it Navis Finserv, where there's a lot of hurdles for getting the NBFC license from RBI, and also we are seeing there are a lot of investments which Navi Finserv has raised sorry raised from last couple of years. And the story behind Navi hurdles, there are many things. When it comes to NBFC, there are a lot of rules and regulations where particular NBFC has to follow as per the regulations of RBI. And coming to the license, why it is getting delayed, or why RBI has denied the banking license to Navi Finserv, we can analyze in deeper in the next episode. But the this investment, the key to investment is that where Navi Finserv is facing difficulties in terms of fund flow from various investors, for which the various permissions is required. I believe the exit by Bansal in Vola is also one aspect where we see that the fund flow maybe proceeds from this exit will go to Navi Finserv. That also we can see. But one more news we can note it down that there is a plan for an IPO by Vola. But we are hearing that we are hearing every day news that they are going to list out a list in preferably by 25-26 financial year. So so we one point we can note it down why it's an exit before IPO. So that also one sense of mind we can see that maybe is looking for pushing more and more upliftment of Navis Finso is his own startup. So that may be the thing. And coming to this entire deal, what we can note it down is that this a gain from valuation. So the investment you had made in 2019 with $100 million at $3 billion may go up to $4 billion. So there is a 33%, 3% gain, which we can establish around uh, 6 years return, where we can see where Wala so listing by the various customers, what the business which Wala is doing. There are very many things which is the number which are told is only from the reports, but actual scenario we need to wait and see. That's one a topic at today's one at one, where we talk about Wala's exit by Bansal. Coming to the second episode at 7 at 7, we talk about relief for GST taxpayers. Deadline for GSTR 1 and GSTR 3B extended after GSTN reported technical issues with the portal. And where we are even I was also tried filing GST returns of my clients in the last yesterday, but there's a glitch in the portal, and it said it is a technical error which is pop up. So we waited, and again it was said that 12 p.m. it started, but again it has been posted to 3 p.m. So entire India, these technical glitches were there due to the issue. GST council as apprised to government, and the deadline for GSTR 1 and 3B both has been extended by 2 days each. So now GSTR 1 deadline is now January 13th, 2025, which was normally 11th January. Now it has been extended to January 13th, like 2 days more days they have added to taxpayers or GST registered vendor, like payers to avail this facility and file the GST1 return. Coming to GSTR 3B, again this 2 more days has been extended, so it is January 22 for December 2024 tax period. Coming to quarterly QRMP registered players, so they can that has been GSTR 1 date has been extended to January 24, and 4 more days given for QRMP scheme. Coming to GSTR 3B, it is January 26. So that's about a deadline extension for December 2024 GSTR 1 and 3B tax periods, and there is a few more deadlines were extended for GSTR 5 and GSTR 7, and for GST TDS return filers. So that's about one topic. Second topic at 7 at 7, and coming to third topic at 7 at 7, it was angel tanks removal, which we are happened in 2024 budget, which news is flagging that a lot of startups are returning to India after the abolition of this angel tax, signifying there's a positive changes in the business environment. So DPIAT is also working to increase capital mobilization through various initiatives, including collaboration with foreign entities and the funding schemes to support the startup ecosystem, and working with various state governments to promote intra capital subsidies, and entire ecosystem of by generating more and more employments to through startup economy. So coming to the data point, where we are seeing from DPIT is that around 1.57 lakh registered startups in 24 versus there were 400 startups in numbers in 2016. There is a gradual jump also one see we can see from data point. And the second data point is that around 155 billion dollar funding in 2024 itself versus 8 billion dollar in 2016. I think one more point is that uh, the one more point is that there are 100 NSE listed companies to mentor startups. That also one point we can see, and one more point which added that government is talking with various countries to increase this startup exposure, various sectors like AI and deep tech and manufacturing and healthcare, agri tech and various sectors. So that's about pushing startup ecosystem in India by government of India, which is third episode at 787. And coming to the fourth episode at 787 is that there's a news that which I have read. There are only 1% of ITs filed have been selected for scrutiny, and I think a lot of people knows that this scrutiny selection approximately we don't know the person, but I don't know the percentage, but it's mostly depends on the algorithms which the department analyzes through various tech-related tools, which they pick the idea, then it go for scrutiny, then it go for appeal and various stages. And coming to that point, Control and Auditor General, AG recently said the income tax department has been inefficient in handling direct tax disputes with a large amount stuck in tax litigation. The CAG report, also titled Specific Complaints Auditing on Outsourcing Demand and Income Tax Assessees, tabled in the winter session of Parliament, highlighted instances of exaggerated tax demands, incorrect interest levies, and mistakes in giving effect to appeal orders. So this is what happens is that when C&AG goes and inspect the audit of income tax department, how the entire process was happened, this was pointed out by C&AG in their in their scrutiny of income tax department files. So and also point out that there are roughly around 5.8 lakhs income tax appeals are pending. And coming to the this demand due at the end of financial year 20 to 23, the total income tax areas corporate and personal income tax stood at 19 lakh crore to be recovered. So this is the some of the points which I read from one article where it says that only 1% of ITs face scrutiny, which that is also cases which was picking by system algorithm, and entire flow of this chain happened through faceless, which gives a lot of hurdles to taxpayers, department officials, and many things which may system sometimes will not find out entire 100% cases scrutiny. And coming to the cases which were which were find out by the system, and taking that cases and doing this may leads to some kind of gaps which department has to look into in deeper aspects, how to flag these cases where actual issues were there which were some way this not disclosed or covered up. So this is one point where we just noted down it fourth episode at 7 at 7. Coming to fifth episode, at 7 at 7. This is a very small, small quick commerce update that this the evolution of quick commerce by these players, Swiggy through Instamat and Zomato's, Blinkit and Jeptos. They were into very keen on the quick commerce models for delivery of their food, and it has been extended by Flipkart and Big Basket and various other players also like Mintra. So now there is a new vertical which Swiggy has launched as a snack, and Zomato has launched Bistro and everyday into their separate verticals. Sorry, verticals where which the food items like other than which they are serving in the niche market, they will be doing it. And Jepto is also has launched cave where they're seeing a lot of orders from around 30,000 orders they're clocking in a day. So this is small an update on quick commerce, where quick commerce are going with very rapidly by these parties like through various verticals. And that's about small news about quick commerce. And coming to the sixth episode at 7 at 7, where I'm going to talk about one interesting find out from one of the forensic audit which I have done for one specific scenario. What happened that one of the request came to me for understanding work in progress which the company has made, not company, I can say some X has made. Since the officer has asked me, the client, one particular client asked me why work in progress is not moving one particular balance sheet. So I've asked him various of data of financials and details about their accounting system of understanding the transactions for last 3 years. So when I've analyzed, still it's not moving. So it's an opening figure which is result from a couple of years. So I've asked him more and more data. Can you give me at least for 7 years data? So they have dumped a lot of data to me, where I tried analyzing why this work in progress is created. So where I can see, at the end of my evaluation, I found that there is a misappropriation of funds. Why? How come it has been like that? So when they got the cash, like money from, when they have the money, what they have done, they created an asset in the balance sheet like work in progress. So their cash balance or cash and bank balance, which is there in the current assets in the balance sheet, has been reduced and it has been moved to the work in progress. So when work in progress has been moved, so there might be an something which is in actually in you know incomplete stage. It may be an inventory, it may be an asset which is in the trading company if it is inventory, and if it is an other than non-trading company, it is an asset. So we're actually analyzed. So there is a no asset which client, that particular client has provided, and he said that it is in an incomplete stage where we have put it in the warehouse. So altogether, the company is in the not in inventory model. I'm saying it's a not a trading company. It's a non-trading company. So I know I got an a deeper doubt on that. So when there is an not in existence and a not in form and a not it it has an intangible asset also. So there might be amounts which they are going to pay someone. So what they have done, obviously they pay to various people, which I can able to see it. And and when what happened that when they are paying, they created work in progress to bank. So there is no party involved, nothing. So they just paid that amount to certain people on the ground, like whomever, which their subsidiary companies or whatever there. So money went out and they created work in progress, and balance sheet is like that. So asset and liability is matched. So when we are going to, when you are going to check any particular bank balance in the company, it's nothing like they're saying that we created an asset and for over years the money has been out, and there's nothing in the company. So this is also one misappropriation of the funds, where we should be very careful when we are seeing any particular asset which is not moving in the balance sheet. So a lot of cases where we do diligence, when we compare with figures like from various last 3 4 financial years, on the basis of comparatives, there is a interesting point which we noted down. When there is a non-movement of balances, the real case is there only. So when there is a moving in the figures, where we can see there is a high growth, low growth, and there's a negative gross margin, a net margin, increase in the turnover, this thing, with the point of concern is that all people goes to the this variations of main items. But when there is an item which is not moving and not in the balance sheet or P&L especially, there is a concern. So why we should put a little bit more kind of analysis on that particular aspect. So I think the 1% gap which we check 99% and leave that 1%, that is the problem. So we have to analyze why it is not moving. If the case is that not moving, that is parked somewhere like work in progress or some kind of asset like investment into other company, then there's a case of misappropriation also. So we should be very careful in verifying the non-moving items also. And so that is one point I want to talk about during my latest work which I have done on case of misappropriation of funds. That's about sixth episode at 7. And coming to the seventh episode at 7, this is also one concept which I want to publish, like within a simpler terms, like how state government works, right? In many many state governments in India especially, they works like budget models. So government allots budgets to various ministries like technology, agriculture, roads, various we can say animal husbandry, and various health, and we can also see infra, and we can also see development. We can also see there are various corporations where they operate through a budget model. Once government decides 1 lakh crore, for example, per year budget for one state, they'll pump this entire 1 lakh crore into different schemes, like not schemes, through corporations, wherein which entire work will go. Like for example, if the state government intends to do 60% development and 40% for welfare of the people, so 60% goes to various corporations which they are into development, like for example technology. So which company, which government is thinking that they want to develop a digital library in particular place, like various towns or villages. So these corporations which comes under digital development, library development, will incur the expenses for the development for that particular digital library. It's coming to the other scheme where some 40% of the funds government decides to for welfare, where they give 40% through subsidy by of ration, by of a pension, and by of by of healthcare, by way of various other measures which directly benefit to the welfare of the society. So these also various corporations which they will be under of the government, then they'll take the funds and infuse do these activities. So how it works, like in kind of, okay, how the money flows. For example, there is various state governments work like PD account model, like public deposit model. So all governments, all corporations or PSUs or government associated entities or societies or trust will be having CFMS account, in the sense means PD account, which will be opened in the revenue department of that particular state. It may be an current account, it may be an online account which which concerned revenue department or finance department of the state allocates and creates it. So through which money will be pulled from finance department to various societies or corporation or trust or PSUs, which are told the purpose of the government supplies, like if it is 60/40, 70/30, 50/50, will be decided by the government through their budget and pump the money into various corporations or trusts or etc. Then this trust or corporations will take into an action, and actual process of moving funds to the welfare of the society will start. So this is this entire crux, right? We need to see the PD account, like public deposit account, which maintains by every PSU or government as trust or government affiliated body, and where it maintains, it maintains at finance department. So that's about little bit concept about PD account. But and the subsequent episodes I'll talk about how to account public deposit accounts, and how state governments are operating, and how to show which under which head of balance sheet, like schedule and schedule 3 of companies act, like where it we have to show whether it is in current assets or non-current assets in Indians, where we have to show, and what is the whether we show it as an long-term asset or short-term asset, whether it is an cash and cash equivalent or not, and what is the rights of that PD account by particular PSU or government, and C&AG observations of this PD account of various state governments I'm going to talk. So that's about 7 interesting topics at 7 episode 5 of this today's episode by CH4. And I think so this is a small aim is to talk about more concepts on the economy. In the coming episodes I'll try to bring more and more concepts which are read and implemented, and try to explain here in a somewhat understandable manner or lucid way. So that's about today's episode. I'll be coming with next episode shortly. Thank you so much everyone for listening to this, and please subscribe to my channel for getting an instant update for the subsequent episode details. Thank you so much.